that is practically made maximum gains for investors ever since it listed RBL, Ratnakar Bank. Vishwavir Ahuja, the manager and CEO of RBL Bank, has joined us from the sidelines of the 8th Motilal Oswal Eureka conference that will be underway in London. Mr. Ahuja, good morning. Thank you very much for joining us. Well, you all are growing at a staggering 40-45%. Is it possible to maintain this rate? What is the realistic expectation going forward?
Indeed, there is a growth challenge in the economy, particularly in the corporate segment. Yeah, the non-corporate segments were also affected by the demonetization, but as I said earlier, that is normalizing. But there are two things in our context which work in our favor. One is that we are coming off a small base. We are a small bank which had a small base, so numbers tend to look a little better, on a percentage basis. The second aspect is that the segments in which we operate, we are able to, in a sense, extract better mileage and market share, if I may put it that way. As some of that space is either getting slightly vacated by some of the other banks, who are preoccupied with other challenges that they have, and in some of the newer growth areas like mass banking, in terms of the financial inclusion and development banking platforms that we have, where we lend to the lower income segments of society, there is still fundamental high growth happening. And I think the bank has a strong position in those fast growing segments, and that is propelling some of our growth. So not necessarily, it is across the board, the lack of growth. And we are benefited because we have a fairly high proportion of capital and business focus in some of these growth areas.
Mr. Ahuja, good morning. Given that the capital consumption is also on the higher side, do you have any plans of raising any money in the next 3 to 6 months?
So this is a question that most investors here and potentially interested investors are asking. We are frankly consuming about 50-60 basis points of capital every quarter based on our growth rate, which means that we are consuming anything between 2.25% to 2.5% of capital on a full year basis. And that naturally will lead to a situation where in maybe towards the end of this calendar year, we are once again, in line for the next capital raise. So I'm answering that question pretty directly.
Yes, that's very candid of you, Mr. Ahuja. Not many people will admit. Okay, end of the year, expect some capital raising. Okay, let me come to interest rates now. Pretty sharply down over the past 40-50 days. It should have affected your margins. What's the margin outlook for FY18?
So again, I can answer for ourselves. In our specific case, the operating margins have held up quite well. We operate at a NIM of around 3.25 to 3.4%, that range. And despite the rate cycle, movements, we've been able to, in fact, improve NIMs slightly in the last 8-9 months period. And we continue to hope that we will see some more, incremental improvement. The reason for that is very simple, that as we acquire more scale, more market share, we are experiencing cost of funds reduction, as we go along. So just as the rates have come off, gradually our funding costs are also going down. So which allows us to at least maintain margins and certainly not erode margins going forward. We certainly expect over the next 1 year, this scenario to continue to prevail. And I also believe that in the short, medium term, the potential for further rate reduction is now, very minimal. I think we've seen most of that already behind us. And even the Reserve Bank of India, in its last credit policy, has signaled a more neutral stance, to the monetary policy situation going forward. And I kind of totally, relate to that. I agree with that.
Okay, Mr. Ahuja, what's your loan growth guidance for FY17-18?
So I mentioned earlier, we are hoping to continue to grow more than 30%, year on year. In the current year, we are growing faster than that. Yeah. But even from next year onwards, our hope is to maintain our initial guidance of growing above 30%.
No, we heard that 30 to 35, Mr. Ahuja, but the reason why the growth question is again coming back is whether there will be any inorganic. Okay, before I come to those inorganic moves, do you hope that you can maintain the operating efficiency going forward, the one that you have shown so far?
Our operating efficiency actually should improve going forward. Yeah. Much of the investments we made in across the platforms of the bank in the initial years are now, in a sense, paying back. Many of our businesses have reached certain points of scale and escape velocity, where we are seeing, better and better returns come from those businesses. And so the need for fresh investment is not as high going forward, even as we get the benefits of our investment. And what that is doing is reducing the cost-income ratio of the bank. The operating leverage is improving, so that is bringing down the cost pressures.
Okay, now let's discuss the inorganic moves. Is there anything possible in the near term, any takeover?
So at this moment, we have not gone in that direction at all. So there is no consideration or discussion around inorganic at this moment in time.
Really, sir? May I be more direct? Are you interested in acquiring Bharat Financial?
No, as I just said, my immediately previous answer was that at this moment, there is no consideration or discussion on any inorganic.
Okay, at this point, that's the operative phrase. Mr. Ahuja, thanks a lot for your time today. And congratulations, you have made money for your shareholders and, of course, for your employees as well. We'll take a break on that note. Up next, fresh technical ideas. We have Ashwini and Mitesh joining us, and we'll get some more trading ideas.